Good day and warm welcome to Shaped Theory. Today in this video we will be looking at the carrying amount or book value of an asset. We have to take into account that in this video we are looking at the cost-based accounting and not advanced accounting principles where fair value accounting is taken into account. This is part 3 of the balance sheet item series that Shaped Theory is running. Do make sure that you check the other videos relating to this series to make sure that you understand the common items that are in the face of the balance sheet. If you need to read more about this and other accounting related items, please visit our website at www.shapedtheory.com. Please don't forget to also subscribe to our channel, and also please leave your comment on the comment section after subscribing and tell us if there is any topics that you would like us to cover. Now, let's look at defining the carrying amount. Before we go deep into defining the term carrying amount, we need to know that it is also referred to as a book value. In a nutshell, it is either a carrying amount of an asset or a book value of an asset. Now, a carrying amount or book value of an asset is the amount of the asset reflected in the balance sheet or statement of financial position after having deducted the cost price of the fixed asset from the accumulated depreciation. This amount is mostly reflected or presented in the face of the balance sheet or statement of financial position in the annual financial statements. The other items that makes these amounts are therefore reflected or disclosed in the notes to the annual financial statements. For a carrying amount or a book value to be present, we need to have two items. Those items are the cost price of the asset and the accumulated depreciation of the asset. Let's look at the cost price of the asset. This relates to the purchase price of that particular asset at the date when it was acquired, more especially if we are measuring our fixed assets at cost. As mentioned before in this video, we are focusing on basic accounting principles. The assumption is therefore that we are carrying all our fixed assets at cost basis. The accumulated depreciation refers to all depreciation amounts of the prior period and the current period added together, which will give us the accumulated depreciation for that particular period. Now, let's look at how the carrying amount or the book value is calculated. For us to calculate the carrying amount, we'll need to take the cost price of the asset as reflected on the slide and deduct the accumulated depreciation, which will give us the carrying amount or the book value of that particular asset. The following slides will also define these two items separately in a nutshell. Let's therefore break the two items that you need in calculating the carrying amount and look at them separately, as I've said in the previous slide. In this slide, we are only looking at the cost price of the asset. As we have mentioned before in the previous slide, this is the purchase price of the asset when it was acquired. It has to be noted that companies need to ensure that they have sufficient audit evidence or supporting documents to prove that this asset is controlled by the company for audit purposes. In a nutshell, a company has to prove that the fixed asset meets the definition of an asset as per the International Accounting Standards, acronymed IAS. Let's look at the accumulated depreciation. As mentioned before, accumulated depreciation refers to all the depreciation amounts of the asset over the previous periods. These amounts are added at the end of every period to come to the total accumulated depreciation for that particular period. The accumulated depreciation will have to be deducted from the cost price to come to the book value of that particular asset. Therefore, the accumulated depreciation amount is calculated by adding all the depreciation amounts, and these amounts need to be all amounts from all the previous periods to the current period. This will therefore give you the accumulated depreciation as seen on this slide. Now remember, the carrying amount or book value of the asset is its cost price less the total accumulated depreciation. Let's therefore look at an example on how the carrying amount or the book value of an asset is calculated. Let's say company A has an asset which has the cost price of 1,000. The accumulated depreciation of this asset, including the current year depreciation, is 360. We will calculate the carrying amount or the book value of the asset by doing the following in this instance. We'll take the cost price of the asset, which is 1,000 in this instance, and deduct the accumulated depreciation of 360. This will give us the carrying amount or book value of 640. Basically, these are the basic principles that you need to know to be able to calculate the carrying amount of the asset or a book value of an asset. That's it for now, and thank you for watching this video. Please don't forget to subscribe to our channel for more videos like this, and also please leave your comment on the comment section after subscribing and tell us if there is any topics that you would like us to cover. Don't forget to check the other videos relating to the balance sheet items for better understanding of these items, of course. If you want to read more about other finance related topics or accounting related topics, once again, please visit our website www.shapedtheory.com. Thank you.